All right, good Monday morning, everybody. Dalton Grados with Grados Capital here for the pre-market newsletter. By the way, if you are just watching this on YouTube and you're not subscribed to the pre-market newsletter, I do a daily newsletter, which is in video form today, but most days is in written form. But sometimes at the beginning of a new week, I like to do a video. So that gets emailed directly to your inbox. It's totally free. First link in the description, so you can join that newsletter there. And the rest of this, people watching, of course, you are newsletter subscribers, so thank you for your support. And of course, this is totally this will always be free for you. This is something I like to do to provide value. So I hope you get something from it. Now, let's go ahead and look at this week, this upcoming week ahead. Before we go ahead and look at the charts. So today, Monday, nothing notable, but we have CPI data coming up tomorrow. Wednesday, we have PPI data. We also have an FOMC conference and Fed funds rate, FOMC statement. So everything on Wednesday. So traders are most likely anticipating this Wednesday, which means that the higher odds is that today, perhaps even tomorrow, will, might not be much action in the markets because people are going to be really waiting for Wednesday. Thursday, we have some red folders here, unemployment claims, retail sales, typical stuff, but still noteworthy. And then Friday, not much there. So that's our upcoming news for the week. Tuesday and Wednesday are going to be big this week if we're determining, where the market wants to go from here. But let's go ahead and get into the charts here. Now, we typically want to focus on ES. So what I have marked off here right off the bat is the obvious, glaring new week opening gap. NWOG, new week opening gap. So we closed down here on Friday around 43.04, and Sunday evening opened way up higher at 43.48, and we're continuing higher to make a new high. So what this tells me is that there's going to be higher odds of the market needing to come down and fill this large imbalance. Now, that doesn't mean we want to necessarily go against the trend right away, because the trend is clearly higher, right? But as we scream higher, we develop more of these imbalances that the market needs to eventually come down and fill, right? So I pointed out in my newsletter last week, if you're subscribed to the newsletter, this weekly imbalance. Now we have another weekly imbalance here. So if we go to the weekly chart, we have a volume imbalance here in the purple. These are weekly candles. And now we have another imbalance. So should the market trend down, I would first target this new week opening gap. And then on continued weakness, I would target this weekly volume imbalance from a couple weeks ago that the market needs to repair. All right. So be mindful of that. As the market is very bullish, the odds are increasing that we're going to need a correction. And should we get a correction, we're going to need to correct these imbalances. So that's what I'm seeing this morning. On the upside targets, this was my upside target up here, this 43.20 area, which basically repairs this volume imbalance on the weekly chart right here. So next upside targets, we are right now, it looks like filling a fair value gap right here. Oh, well, let me draw that. Yeah, so this fair value gap, it looks like we are filling on the weekly chart. So the next area above that would likely be these highs here, all the way up past 4,500. Right, so that is pretty far up there. So what I would say is that the odds favor that we correct some of these imbalances before heading higher into the 4,500 area because we've already screamed up quite a bit. So that's kind of what I'm looking at going into the week. going into today, I was talking with a friend, and we were talking about how we don't remember the last time that we had a good Monday. And I don't mean to be superstitious. You should not be superstitious in your trading and just say, "Oh, Mondays are crap." But I mean, like, objectively, from as a price action day trader, um, a lot of the past several Mondays have just been kind of blah. So I'm going into to today specifically, going to be treading very lightly, let the market play out at the open, and kind of see what happens. I would like to see this new week opening gap filled, but keep in mind with the news that we have coming up tomorrow with CPI and Wednesday with the Fed, I would say that the odds favor not much action today. That's just what sort of, I guess, my bias going in today. So tread lightly today. The better trades will probably come in the middle of the week. That said, I'm still going to be watching the market, and if it screams trade me, I'm going to trade it, right? So what would be screaming trade me for me today would be maybe we take out some of this buy side liquidity here on the upside, and then have a confirmation break below the overnight lows, right? So below, I would say 43.50, 43.49. So we trade below and into this new week opening gap. That's when I would be looking to enter in on a fair value gap for the short to fill the new week opening gap. So that would be my A plus setup for today if we see it. And so if we see that happen, then I'll trade that. But we could just chop around today, and the market could be waiting for the news later this week. So that's how I'm going into this week. That's how I'm going into today specifically, and keep all these things in mind, and make sure you subscribe to the newsletter if you haven't already. Subscribe to the YouTube channel, and I will see you guys next time.